Good evening, everyone. Today is June 23, Wednesday, 8:44 p.m. We're in the month of June and in the year 2026. So today I will just get right into it. This is the breakdown of the trades I took this week, and I'll be adding an execution, proof of execution somewhere in the video when I'm editing. So I took like lots and lots of sales up until price getting to this point, and I closed most of my positions here. So as I've always been saying, my bias on gold for the month of June as well is also bearish, and so I've just been looking for sell opportunities, and I shared some of the sales I caught on even silver. So usually, like my bias works for both silver and gold, so it depends on the one that gives me the best opportunity. And as you could see, gold has been selling since the beginning of June. So okay, it did an initial rally on June 1st, but ultimately it was for a sell. So I should have even taken a sell right here on gold, and target this lows first as my first target, but I was more keen on silver. And basically I just took the sales based off of the fact that price came into a strong high. So there's something we call, when you talk about ranges, there's something we have strong highs and strong lows. So strong high is basically an high as broken structure, right, and left something. So when price is going back all the way up and then comes back all the way, you can expect a reaction there, and then you just expect price to keep going in your direction based on bias. Also, there's like some little confirmation models that I use to confirm um when price is fully ready to go in my direction, which I'll still be talking about, but not here today. So this is just to show a breakdown of the trades I took. So initially, I wouldn't lie, I took a sell. I took my first loss on gold. Yeah, I took a sell on gold. I took a sell on gold, and I took a loss. So I was trying to sell at around here initially, right? And it was the idea behind the sales was simple and basic, because what I was saying is an expansion, then a range, right, and then a drop, and then price comes back. So this is a typical accumulation manipulation distribution model, where which you have an expansion, and then you have an accumulation that ensues from it, or that comes out of that initial first leg expansion, and then you see price break structure, break out of that range. So it's normal to expect price to come into this level back and then sell off, right? And that was honestly like what I was expecting, so to speak. But at the end, it did not like work out like that. So trading is not always about being 100% right. It is being able to maximize the market when you're right, and being able to also take a loss when you're wrong. And that's the good thing about trading. So I took some losses here, and then I identified price taking out these highs. This was a strong structure point, and then I took my initial sales here, and I used H1 actually to 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 scaling. So I took my first sales here. I took another sale here. As soon as I have a rule to also like join break and retest trades, which I'll not also be really talking about yet in this video. So we had price break, went up, came down. So as soon as price was coming back here, like here, I took another sell here. And then as soon as price broke structure and then went up again, I think I took another sell here. And then I took another sell here, because price also did what again? It broke structure. you see price was going up, and then it broke structure, came back all the way here, and then went down. So I took another sell here, and price was just consolidating around that area. I took another sell here around there. I took some extra sales there, and then ultimately taking most of my profits around there. So the rest of the positions that I have on right now is just for the sake of, let's see how far it is going to go. And I'm also still like looking at the price and still looking at the charts. But ultimately though, in my opinion, I want to see price take out these lows. So the only thing that can most likely negate our bearish bias for gold is if we start seeing like some massive pushes to the upside. Like I mean very much massive pushes, and price is just going up aggressively. Then I know I'm not like in line with the chart. So but for now we are still bearish, and you consider the chart is still ultimately bearish. But let's just see how it goes. If you look at the daily, from the overall perspective, if you look at the daily still looks quite bullish, and I'm so sure that a lot of traders wants to buy gold because price has been going up, down, up, higher highs, higher lows, higher highs, higher lows, higher high. So it's safe to expect price to come here, right? And then expect a push up. But the reason why I would not be expecting that is because interest rate is currently going up. Interest rate is currently going up, and that is one of the major key factors that is driving. The interest rate is currently going up, and that's one of the major key factors that is driving gold prices down. So the moment you start seeing interest rates going down, that would definitely make holding assets like gold. So when interest rate starts to go down, gold starts to make sense to investors because now they would rather put their money in an asset that is presumed to be a safe haven compared to buying low yields bonds, because when the yields are low, people do not want to put their money into yields because they'll be getting less return. All right, so I'll still be talking about some of these things, and the opportunity cost between holding non-yield assets like gold, stocks, and also what you start to gain from holding high yield bonds and stuff like that. So I'll still be talking about a lot of this, but let's just hold on to this. So for the most part, I'm most likely like done for the week, except I'll just hold my tiny little bit running trade, and then I'll just keep my fingers crossed, and let's see how the rest of the week pans out, and let's see how the rest of the weeks pans out. But I'm still heavily bearish. But if price starts breaking structure to the upside, I would I would I would revisit, because like I've always said, there's always a front side to a bias, and there's always a back side to the bias. So it all depends. So if your bias is bullish, for example, let me give you a perspective. Let's say you have a month that is meant to be bullish, but price keeps making new lows. You either do two things: find a way to keep following price as it's going down, maybe on H4 or the daily time frame, while at the same time you keep your backside noted. So the moment, let's say for the first 1 week or 2 weeks, price just keeps going down and your bias for that week is bullish, just keep staying on the front side, so on the back side. So the moment price starts breaking structure, let's say price broke a range and then gave something like this, came back down, right, and then finally breaks structure, this is a sign that oh, now price is now on the front side and now it is now fully confirming your bias for that month, and then you can start piling up trades. Your first entry will be here, second entry here, third entry here, fourth entry here, until it just keeps going like that until bias changes, or you're just stacking and you're like, okay, I think it is time for me to like hold my trades. And holding trades is quite a little bit um it's also a mental game, because your brain is not mentally making decisions. You're not like being all over the place. You're not taking trades almost every day, every single hour. You're not like going through that emotional turmoil, that because what our brain is addicted to sometimes when it comes to trading is not profitability or even losses. The issue is that when you trade, you are constantly making decisions, and those decisions are constantly stimulating your brain. You're feeling sad right here, you're feeling happy the next day. And that is the reason why we are in a constant loop of losing consistently. So I'll be wrapping up the video here today for now, and I'll be updating you guys as it is. I will just make another video, still talking about the macro and its effects on price. We can never stop talking about it. We can never stop talking about it. We always constantly talk about it. All right, so let's just see how the rest of the week pans out. Maybe I'll just drop another video before the week runs out about talking about macro data and such like that. So have a wonderful day, guys. And if you have information, if you have questions to ask me, I would always like get back to you and explain to you whatever you need to know. Thank you so much and have a wonderful day.